Welcome to the Close More Deals podcast. I'm your host, Scott Dillingham. I'm really excited to be here today to show you guys how to grow your business. I've been helping teach and coach realtors for years about special programs, rates, terms, conditions, anything and everything under the sun, which has enabled realtors to close more deals. So I'm here today to show you how to close more deals as well. So generally, when I do these things, I like to start off with rates. So I'm going to share my screen. If you're watching this or listening on Spotify, you can watch this and you can see exactly what I'm going over here. So ideally, 5-year fixed. This is insured. So we're putting less than 20% down. We've got a 3.94 and up. If we go with a variable, we've got 3.54 as the lowest, as you can see. Now, if we go insurable, so insurable means behind the scenes, the lender is still insuring it with CMHC or equivalent insurance provider. However, there's no CMHC fee to the borrower. So you do have to have 20% down or more, and you have to have a 25-year amortization. So that can be a negative for some buyers because they want, some might want the smallest payments and want the 30-year. But if we look at the 5-year fixed, the lowest is actually remains the same at 3.94. But for the variable, that does go up a little bit. We're at 3.69. And then lastly, uninsurable. So this is purchases 20% down. We're getting a 30-year amortization. The lowest rates are starting at 4.24. And then if we go with the variable, we're showing around 3.95. Now, please keep in mind, all rates are as of today. The next thing I want to talk about is part of these episodes. I'm trying to do like 5 minutes or less once a week, so you have the latest updates. I think the most important thing that I want to get this started off with is you want your clients to deal with an experienced mortgage lender or broker. I used to work at a big bank and I got so many referrals because the realtor said, "Oh, well, my client banks there. It was easy to go there." And you know what? That might be right, but you are severely handicapping your client's pre-approval and your paycheck by having your client just go to the bank. Now, on the broker side of things, realizing and seeing all the different lenders and all the different terms, there's differences. So for an example, and I'm not going to call out the lenders' names here, but there is a major bank that, let's say you have 2 credit cards and they total like 30 grand of limit. Okay. And you owe nothing on them. There are some lenders that will factor in a minimum payment against that debt as if you leveraged it all. Okay. So for credit cards, they factor in 3% of most lenders, it's 3% of what's owing. But some of these lenders are going to do 3% of the limit. So that means we're using $900 of artificial payments for the client's pre-approval, which means their amounts that they can get are much smaller. Where we would, knowing that, we would partner with a lender that doesn't factor that in to have your borrower qualify at the maximum leverage. You see what I mean? And I'm not going to call out the bank, but it is a big bank. And it's one of those banks that people just say, "Oh, you bank there. Just go. Bring all your documents. Just go with them. It's easy." So I know it's a little more challenging to be like, "Hey, you should speak to an expert who has all of the lenders, not all, but as close to all of the lenders as possible. So you're getting the best information." Another example, child tax benefit, right? Some of the lenders only use 30% of it. Some will only use 50% of it, while others will use 100. So right there's 3 different lenders with 3 different policies that we could get 3 different pre-approval amounts for your borrower. So if I know they're trying to qualify for the maximum, I'm going to leverage that and partner with the lender who understands this and can qualify your client, not using 100% of their child tax benefit. So there's little tricks and tweaks. So I just want to start off this week with that. Okay. Don't just let them go to the bank. That is the path of least resistance. We will ask the client as well when we're working with them if they prefer the bank, but then they get access to us and our expertise. But when we start to show them where the other lenders are in comparison to where their bank, would qualify them what the rates might be, they're on it. They don't care anymore about going with their bank. So we've just done them a huge service by showing them what's out there. So anyways, looking forward to hearing from you next week. If you want to work with us or any expert on my team, the link is below to refer your clients to book strategy calls, or even you yourself can call us, and we'll give you any information that you need about your clients, and we'll work with you to help you to close more deals. See you next week.